That's a very loaded question. Rates are complex. Rates will vary depending on your situation, your credit score, the loan amount versus how much equity you have, what kind of loan program you're doing. There's many, many factors that go into a rate. Most of the time, mortgage rates are in the same ballpark of each other. Now, there can be some differences between companies and lots of other details we won't talk about, but most likely you're not going to get a rate 1% lower than someone else. So if you get a rate that's way less than someone else quoted, that's your first clue to look a little bit deeper. Paying discount points is really a long-term play. So if you do want to pay discount points, then there's a couple of things you want to think about. Are you planning to stay in that home long enough to really recoup and see the benefit of paying that money up front? Do you think there's going to be a refi opportunity? Sometimes there are situations where that makes sense and we'll do that. Like when rates were super low, you didn't care if it was 3 versus 3.25 if that gave you a chunk of money. So if you also get a quote that has like way low fees, make sure that you're comparing apples to apples and the two lenders that you are comparing are including all the fees that are associated with the loans. So not all rates are created equal. Not everybody's going to get the same rate. Rates will vary depending on what your credit score is, whether you're doing a purchase, refi, how much equity will be in the property, what kind of property you're buying. Is it going to be your primary residence? Is it going to be a rental property? There's many factors that go into what your rate actually is. So if you're shopping for a rate, always get the full quote. Look at all the fees associated with the rate. But just to wrap up, don't take a rate from an online website. You're not giving the full story. Also, just a number from someone is not telling you the full story.